Farmers have been challenged in 2020 with COVID-related issues in the food system, and at the same time, continuing trade issues with exports being down from a year ago. So it's a challenge that has transmitted into lower agricultural credit conditions, but at the same time, we haven't seen it in the farmland value declines. They've actually been fairly steady from last quarter and up just a little bit from a year ago. The farm scenario today is quite tough in terms of market conditions and what's been happening with the pandemic-related impacts on the food system. At the same time, it's not as challenged as it was back in the 1980s. It does seem like it's more challenging than any time since then. So it's a very difficult period. The federal government has stepped in and provided help through coronavirus food assistance program, and that has brought in over $1 billion to our district by the end of June, and now almost $5 billion for the nation. So it was about 27% up to that point that our district was seeing of those receipts. So that provided some help and probably dampened the amount of demand for loans. At the same time, it would hopefully have supported some of those repayment problems, but it's still a pretty difficult period for farm operations. Generally, crop conditions in the Midwest are good overall, but there are some areas that are low on precipitation. In particular, western Iowa has some drought, and there's also some dryness and slight drought in eastern Michigan. So it's a period where overall there's really pretty good conditions that are going to lead to probably above yield harvests in a lot of the district, but then other parts of the district will see probably below yields. And then there was a storm that came through just this week, and that also knocked down some of the crops in Iowa in particular. So probably more struggles in Iowa than the rest of the district. And at the same time, when you think about it overall, we could see an increase in the district's corn and soybean revenues of, small increase for corn probably, but it could be a double-digit increase for soybeans, even with lower prices, just given the size of the crops that are anticipated. The amount of acres planted was up this year, so that's going to give some impetus to that, as well as if the crop finishes out well, it would be above yield harvest then. Agricultural exports were down in the last 12-month period from June of 2020 back to comparing to the prior year, and it's been a challenged period, whether you look at the prior trade conflicts with China and other countries that had lowered our exports, or then what happened with the pandemic that also lowered the trading around the world. And so it's been a period where some kinds of agricultural products in particular were really impacted in terms of lower prices with less exported. At the same time, some kinds of agricultural products are doing all right, such as dairy. There was an increase in exports, but that previously had been hit by a decrease. So it's kind of mixed in some areas, but generally there's been a lot of stress because of the trade disputes and lower exports of those agricultural products that our district provides. Agricultural credit conditions for the second quarter of 2020 in the 7th Federal Reserve District deteriorated again. It was a tough quarter in many ways, but at the same time there was additional funds available for lending. The quality of the loans seemed to deteriorate some in terms of their was greater demand, greater need for some collateral, and at the same time the repayment rates were dropping as well. Repayment rates for the second quarter of 2020 were down again from a year ago. There was a lot of funding coming in from government programs, but that didn't seem to support the repayment rates particularly. Maybe they would have been even lower without that, but the second quarter reading on the percent of the portfolio that was having major severe repayment problems was at 8.3%, which was the highest since 1988. So it has been a long time since our district's loan portfolio was having as significant payment problems as it's seen today.